Alright guys, welcome back to another video. Today I have the SPX pulled up and we're also going to take a look at the SPY to kind of determine whether the stock market will continue its bullish run or correct back down and continue its bearish decline. So taking into account, we're looking at the SPX, which is the S&P 500 index. So this is, a lot of investors look at this index here for market direction. So this tells you a lot. So basically we have, the massive sell-off obviously here with a correction down here that began on March 23rd, and we rose all the way up to 2,659. And honestly, in my humble opinion, I do think the stock market's going to recorrect, or this market in particular is going to recorrect. You know, we have gaps here. Gaps usually do tend to get filled, but they don't really necessarily need to. We have gaps up here also around the 3,300 level, and some here too. But honestly, everyone is staying at home. I just think that this is going to affect U.S. economies. Like if bulls push the price up, it's just going to be a pump, honestly. And I just think there's more potential on the downside. And right here is a great opportunity to short maybe the SPY, because if SPY is a little bit, it's a lot cheaper than the SPX. So if you want to trade SPX, definitely look into the SPY ETF Trust here. But anyways, market. I mean, we have momentum here, but honestly, I'm not really looking at these indicators here. Honestly, they don't really mean much. Like the RSI and the MACD are showing signs of bullish momentum, obviously, because we have this here. But will we continue to rise? I don't think so. Let's look at other time frames. Let's look at the 180-day 4-hour chart, and then we'll go a little bit closer in to see. See, we're already reaching the 200-day simple moving average, and a nice decline here. Could not pass this resistance here. But also, I mean, I have these trend lines before, because before I had thought that markets are going to consolidate. Now that's still a possibility, as it can just trade sideways for now. But I still think that this was the first dead cat here. So if we go to the 1 year 1 day, back to this here, we have our typical market trends here. So we have the first decline with a pullback, then another decline, the major decline without any significant pullback until this point here. Now we continue to rise here, but honestly, like I said before, I think it's a perfect opportunity to short here, and because it has more downside potential in my opinion. Of course, with the coronavirus, I just don't believe that the economy is going to improve anytime soon short term, because I feel like the coronavirus hasn't even been in full-blown effect, and the economy hasn't really adjusted to what has happened in the recent months. So, that's my verdict on this. You can have your own opinion. Let's take a look at the 5-day 15-minute chart. We see a pretty strong resistance here around that $273 level, and simple moving averages are pointing upwards. So short term, I believe it's a grand play to short this market here. But besides that, I hope you guys got some value out of this, kind of got an understanding on how I come up with my own opinions. And if you have any other suggestion, please leave a comment down below, because I'm always trying to learn. Obviously, I want to look at other people's point of view and kind of compare it to mine to see if we can actually come to a compromise, or I change my opinion. And yeah, you never know. But anyways, thank you for watching, and I'll see you guys in the next one. Peace, guys.